Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today. Today is Thursday, July 10th, and we've got quite a program in store for you. I'd like to bring up Mark Koziel, Mark Peterson, and Lisa Simpson, the Town Hall team. Mark Koziel, another very important moment for us in the Town Hall community with this historic bill. You know, what we do here in the Town Hall is we do our best to bring the best available information, provide our real-time analysis, and talk about, strategies and capabilities that can make the firms and members in business and industry more successful. So, Mark, it's great to have you with us today.
Thanks, Eric, and it's great to be here, and welcome to all of our members. I do want to also just kind of give a thoughts and prayers to those in Texas affected by the storms that are happening there. We are thinking of you, and hopefully recovery happens fairly swiftly. So that said, it's been an incredible week. And I have to give a public apology to Mark Peterson, who I've said since January was crazy to think we'd have a reconciliation bill, one bill that passed by July of this year. I said, there's no way. In the last 30 years, we have never seen tax legislation pass much before November, most times in December, and the first time in at least 20 years. Our profession has an incredible opportunity to work with our clients this year to make tax planning a little less taxing.
Yeah, well said, Mark. It is going to be great to have more time. And Mark Peterson, the agenda today pretty much is all about the tax bill, and I know you had an active few days leading up to July 4th. So we're looking forward to your segment. So it's great to have you with us, Mark.
Absolutely. No, it's great to be here. And these types of bills, again, which regardless of administration, the way things have been going in recent history is there are fewer pieces of larger legislation that actually get done. And so we've really got to focus on these windows of opportunity for the profession to make sure that we can get the best outcome.
And Lisa, you've got a number of segments today, but I know you've got a segment with a couple of leaders in the tax space to talk about, what's next.
That's right. As I was thinking about what all we were going to talk about today, I wanted to bring in a couple of our esteemed practitioners and volunteers to talk about how they're approaching client outreach, how they're also approaching just getting a handle on this new wide piece of legislation that's going to be impacting a lot of our clients. So I'm really excited to have that conversation with them.
Well, let's get right into it. We're also going to be talking about some of these modern tax research tools with the founder of Blue Jay, who I'll be introducing shortly. But we're going to kick things off with the DC update and talking about this tax legislation. So, Mark, here's a picture from July 4th.
4th of July, yeah. So if let's go back a little bit, because we were talking to the town hall for months about this bill that was coming, and we were kind of having to guess at what the provisions would look like. We know that the focus of it was going to be this extension of the expiring provisions, and that's what one of the emphases to get it done in this year. But we first kind of saw language May 12th, which happened to also be when we had our AICPA council flying into Washington, D.C. So we had the ability to send all those CPAs up to the Hill to start to talk about the provisions. And these provisions, and we're going to go through some of them, a lot of them had been around for a long time. And most of them are bipartisan in nature as standalone provisions. And we've been working on them for years. And we've been very focused on them. And really what it was is waiting for a point in time when there was going to be this window of opportunity to push something through in a legislative vehicle. So we saw on the language, some of it we liked, some of it we didn't. We're going to talk about the pass-through entity tax as well on May 12th. The House actually passed it by one vote on the 22nd. Then it went over to the Senate. They got it out of the Senate on July 1. had to go back to the House because of the changes that were made, which was always going to be a little dicey because the House wasn't particularly happy with the changes the Senate made, but they didn't have much of a choice to get it done by the 4th. So they actually passed it again by a single vote on the 3rd, and then the president signed it on the 4th. So that was the kind of compressed period of time. And as we talked about, had it not got done by the 4th, it would have leaked into this potentially August recess, and then it would have put the debt limit in play. That all got solved. So we still have lots to talk about. And just remember, and Lisa's going to go through this, this is just part of it. The legislative stage is half of it. There still is an implementation and a guidance period of the time that we're going to have to go through, which is also a lot of work and a lot of input from us to Treasury and the IRS.
Well, we're now going to get into talking a little bit about, some of these, important outcomes that occurred. We've got 2 slides of these important outcomes, and Mark Goes, you'll feel free to jump in at any time.
Yeah, and we these are what we're calling the wins. Now, we're going to talk about the pass-through entity provision in a second. But, Mark, the 529 accounts, post-secondary, that's a phenomenal win for the profession and for the pipeline.
Yeah, absolutely. I mean, that's to be able to use 529 accounts for your CPA exam as an example, I think is just an incredible win. And I also want to be careful because, Mark, we try and be bipartisan as best we possibly can.
Absolutely.
And everything, when we looked at this bill, when I looked at this bill, was for the benefit of the profession. And any type of legislation, and you've been around this longer than I, if neither side is happy, it's probably as bipartisan as you can get. And there were definitely both sides that weren't happy about certain levels of this bill, but it shows how big the bill is. It was a matter of how to get it through. And, these are the things that we're happy about.
Yeah, absolutely. The provisions that the reason the bill occurred was because of the expiring provisions from TCJA, which again, there was bipartisan support for, even though there wasn't going to be bipartisan support. This was a partisan exercise for this bill. But on the next slide, there were several other provisions, Lisa, contingency fees. Originally, there was language in there that would allow them. That was dropped. That would have been in conflict with our ethics. 199A, we had mentioned on the previous slide, 1099K and increasing the threshold for reporting. We're going to get into some details on these. But again, these were big wins for the profession and for our clients.
Absolutely. And I think that the client piece is really an important part of what we were advocating for. I know one of the first items I'm going to talk about after PT/ET is the 174 deduction for immediate expensing of research and experimentation expenses. And that caused so much pain when the immediate expensing provision terminated. So again, a lot of things to all of your points. There are some provisions that people don't like. There are some provisions that people do like. And I think all in all, we did a great job of advocating for the profession.
Well, Mark, here's talking about the community. It was
Yes.
the AICPA, leading the way with many others right alongside you.
Absolutely. So this was particularly with the pass-through entity tax, where in 36 states, legislation had been passed that would allow pass-throughs to make deductions, state income tax deductions at the federal level, moving from individual to entity. It was current law, and because of our success, is now current law. But that was taken away in the very first version in the House bill. Which was very unfair. It disadvantages pass-throughs compared to C Corps. And we were, again, we had all the CPAs on Capitol Hill when that was all going on. And we really, really put together a campaign in order to push back on that and fight hard. The state societies were an incredible partner. We had all of them pulling in the same direction, meeting with their members of Congress in congressional districts and in states, making phone calls. We pulled together a coalition. I got a phone call from one of the other professions that needed to understand how this provision hurt them because they had seen our press release. So the doctors and the dentists and the veterinarians, all those that were impacted as SSTBs, started to come together, and a lot of them looked to us, to be honest, to understand the provision and how it would impact them. And we even got the lawyers on the bandwagon, which is rare. But when they started to understand that they were going to get hurt by this, they got their letters up there too. And so the campaign was extremely intensive, but also extensive. So the state societies, the other professions, social media campaign, tons and tons of press about how this was unfair to pass-throughs, which drive Main Street and are just as important as C Corps. And so, again, the outcome was success because there was billions of dollars at stake here. This was scored at billions of dollars, and there would have been billions of dollars that came out of the profession as well as the other professions. And so, putting it all together, sometimes I get the question, does it really matter? Do the phone calls and the letters really matter? And they actually do. It did make a difference, and we were able to see the outcome. You can put the effort in. Sometimes you don't see the outcome. This time we did. A lot of effort, and I want to thank the town hall community because we engaged you with action alerts. I want to thank the Major Firm Group. The Big Four were very active, as well as G400 and the rest of the entire membership. It's not often we send an action alert to every member of the AICPA.
Yeah, and to that point, Mark, I want each and every one of our members to, pat themselves on the back. When you're talking to your doctor client, your dentist client, your optometrist client, you can tell them, you know what, it was your CPA profession and you very specifically as a CPA who helps to prevent this from being a negative effect, and they should be more than happy to pay your fee this year.
Absolutely.
I love it. I love it.
There's questions coming in, Lisa, right now about let's talk about some of the more of the details related to the bill. And I know you've got a couple of slides here that we're going to unpack. And one thing for the town hall community, we'll be talking about this later in the show. We're going to have a special edition on Monday to even further unpack many of these technical elements of the tax bill.
Absolutely. And to that point, Eric, there's so much in this bill. This is a wide range of tax changes, tax extensions. We mentioned the expiring provisions under the Tax Cuts and Jobs Act of 2017. But if we step back and look at it in general, you've got those TCJA extensions, you've got new tax breaks. So exemptions for taxes on tips and overtime, and a senior deduction that we'll talk about more in depth on our Monday show. Changes to clean energy incentives. I know people are already looking to get their hot water heaters swapped out for tankless. I know that they're already looking at how these reductions of energy credits are going to impact their buying decisions. So more to come on that on Monday as well. And then you've got all of these business tax incentives around topics like R&E. I picked a few topics, only a handful, actually less than a handful, of things that we've talked about very extensively over the past several years. And we're going to give a quick high level on those. We're going to talk about tax planning, how to have these conversations with the client. Monday is going to be our deeper dive into the technical provisions of the bill. So again, just a couple to get your juices flowing, and then to make sure that you join us on Monday for our special edition town hall.
And Lisa, even then, an hour probably is going to be challenging to get through it all in an hour itself.
Absolutely.
I mean, we all have a lot of work to do in the coming days, weeks, and months.
And luckily, we have great resources and tax research tools to help us with that. So let's quickly hit on R&E, which I mentioned earlier. And the great news on this one is that businesses are now able to take an immediate expense for those expenditures, so they can immediately write them off. And it's interesting because there's a twist in this that allows for retroactive expensing for small businesses defined as annual gross receipts under 31 million. So then we'll talk later about whether or not a client will choose to amend returns if they meet that small business qualification, or just want to take deductions going forward. Businesses that are larger can write off the remaining expenses that they weren't able to immediately expense over 1 or 2 years, starting in 2025. There's a little caveat for foreign R&E expenditures that requires them to continue to be amortized. So again, we're going to go fast on some of the technical, deeper dive on Monday. PTET, we talked about it a lot, but where did it end up? It ended up that basically the SALT deduction will be increased to $40,000, and it's going to have some adjustments over the next few years. In 2030, this law provides that it drops back down to $10,000. It's got some inflation adjustments for the next few years. So that's the actual state and local tax deduction, the SALT deduction. For pass-through entities, Peterson mentioned that we were successful in our advocacy efforts, and there is no limit on the amount of SALT that can be deducted at the entity level. So a big win. Very complicated. This is as clean as I could put it to you. But again, we'll dig into that in more detail. If you guys remember a few years ago, we spent a lot of time talking about a Form 1099-K, which is where payments from online marketplaces like Etsy, payment processors like PayPal or Venmo, were going to have to start sending out 1099-K notices if expenditures were more than $600. That was, in our opinion, going to create a lot of confusion and also result in a lot of individuals who were not engaged in business, but who maybe sold something at face value on a marketplace, getting a reporting form and then not knowing what to do with it, ignoring it, and then getting hit with penalties and audit requests and all of those things. Luckily, the new provision basically reverts to what it was pre-American Rescue Plan Act. So it's going to go back to $20,000 in 200 transactions. So another good bit of news for the profession. Now I'm going to end on a Debbie Downer note to talk about another issue that we've spent so much time of our town halls talking about, and that is employee retention credits. Again, if you remember, there was legislation proposed in 2024, I believe, really early in 24, that was basically going to provide a cutoff of any new ERC claims of January 31, 2024. So that is, in fact, what has happened in this new legislation. So there will be no payments of Q3 and Q4 2021 ERC claims filed after January 31. And it also adjusts the statute of limitations. So I know that there was a lot of conversation back when this state was being floated. Some CPAs were just now getting clients that were eligible for ERC. Some folks were saying we should have cut off ERC very quickly and that most wouldn't have qualified in these time periods. So a hot topic, but we have a resolution. So with that, we'll dive on into a look at some of the other provisions. This is just a high-level look to, again, pick out some things that you think are going to be of interest for your clients or for you, and make sure you join us on Monday for that deeper dive. But I've broken these out into personal and business just to give you a quick look at it. So then I think the question is, what's next for the IRS? We're going to talk about what's next for you and your clients, but what's next for the IRS? And there's a lot of work ahead of them. We're already getting tons of questions in the Q&A. We're already getting tons of questions through email about, well, what if, and how will this be interpreted, and what happens in this scenario? And that's all going to come down to the IRS implementation guidance. So a long process ahead. They've got to propose their regulations and get those to final. They have to do their revenue procedures and their revenue rulings. We're going to be looking for IRS forms and publication changes, notices, FAQs, et cetera. And our advocacy team is going to be on top of all of this. So we'll be looking at how they're interpreting key provisions in the new law, and we'll continue to advocate if we don't believe that it is, that the way the IRS is proposing is what we expected from the way the law was written. So again, a lot of work at the IRS level. You're going to have a lot of questions. Your clients might have a lot of questions that you can't answer right now, which is just hearkening me back to PPP days, but it's going to be like this for a while. So just go ahead and acknowledge it. Let your clients know. Although the law may seem cut and dry, when you get into the details, there's a lot to work through. So
And Lisa,
again, more to come.
just to add to that, we're an important part of the system. And so the feedback that we get from practitioners talking to clients related to questions to us, to the IRS and Treasury helps fill those gaps. And so we are literally part of their feedback loop. And so it's really important that we give that back. And the other comment I'll make, because we've talked about this in the past, is the Supreme Court Chevron decision. And those decisions that if there's statutory ambiguity, the courts may not leave it up to the agencies. This is going to be a big test on how that works. And so there is the possibility that could slow down the process. We don't know yet. This is really the very first kind of test of those Supreme Court rulings.
That's a great reminder. And it's an opportunity for me to give a quick shout out to all of our wonderful volunteer committees who really dig into a focus area and give us those questions and give us that information that we then need to take to the IRS. So thank you to all of the volunteers who are participating in this process.
And we'll continue that, Lisa, here. And then also on Monday with the deeper dive and any questions that people may have. By the way, all of you in the town hall community will be auto-enrolled for the Monday town hall. So you don't have to worry about that. One of the benefits of being a town hall member, AICPA member, to do that. So that notice should be coming out this afternoon that you'll see it, I think, sometime after the town hall.
Well, Mark, we've had a few questions already on that. We've got a slide coming up, so thanks for letting everybody know. The auto enrollment will definitely be going out, and there'll be a process for those who are not auto enrolled to enroll for that town hall.
Oh yeah, there's a few months to go in the year, and so there's still more to happen. Right now, they're actually working on in the House that they're calling it Crypto Week. And they've got legislations that's gotten out of the Senate, the Genius Act, as it relates to fiat-backed crypto, and there are provisions in there related to annual and monthly reviews and annual audits, and we've been very engaged in that to make sure that they get it right, and we can meet those expectations. And so there's going to be, we hope, some wins there and some opportunities related to assurance. The other thing I will kind of, if you haven't been focusing on this, is the rescission packages. Rescission packages are a way to cut spending, cut federal programming to agencies kind of mid-session, outside of appropriations. So if you think about kind of the DOGE, the Elon Musk process of making cuts or recommending cuts, this is the legislative element of that. And so what's interesting about this is, like reconciliation, it only takes a simple majority. And so they've actually passed a rescissions package out of the House. This one is mostly focused on foreign aid and on public broadcasting. There's some pushback in the Senate, but it's under expedited procedures. So it gets that simple majority. And there's also a clock ticking about when they have to get this done. Now, nothing specifically relevant for the profession in this package, but they're talking about doing a couple more. And so that's an area, again, that could impact the agencies. It could impact other spending areas that we'll keep an eye on. But the good news on that one is at least there's a legislative process where we can engage, which gives us a chance to have input, much tougher on these executive orders that have come out. And the other part is they still have to get the government funded. So, we hit the end of the fiscal year, September 30th. They're supposed to have all the appropriations bills done. That's unlikely. That means that they're going to be fighting over what they call an omnibus to fund the whole government. That's when we get to the brink and we start to talk about potential shutdowns and how will that impact the agencies. Nobody's going to want to shut down the government, but I will say that, there's no certainty that it won't. There's a lot of tension, particularly from the deficit hawks that we're not happy with the cost of the tax bill, that are going to have a tough time struggling with more spending in those appropriations bills or that omnibus. So that's something we're going to have to watch, as that plays out. And then, believe it or not, we could see another reconciliation bill. Technically, they can put one forward with each of the budgets. So we could see one this fall and next spring. Both the Speaker has mentioned the possibility of a second reconciliation bill, and the chairman of the Senate Finance Committee. So it could be tax provisions, could be other provisions as long as they have a budget impact. There is a possibility some of the provisions that fell out of the process because they didn't meet that threshold of the Byrd rule in the Senate, they could reorganize them, restructure them, and take another run. So we're going to watch how that plays out. It is feasible and possible. And then, a couple other items that NDAA, which is a defense authorization, that's one of those must-pass bills. We've seen provisions in there that have impacted the profession around working with China and federal contracting. So there's still this year a lot of activity that we're going to be watching, even outside of taxes.
And Mark, if that happens, that there's a second reconciliation bill, that still makes me right then at the end. My apology might have been premature.
I'm gonna want a ruling from the parliamentarian on that.
Okay.
There we go. So Mark, you've covered some of this.
Yeah, well, the technical corrections is big. Every big bill always has a follow-up bill that fixes things. So that's another area where we may see some statutory fixes to things where it wasn't clear in the first bill. And then we've got another great piece of legislation that has the SAFE Act in it, which is the safe harbor for extensions, 125% of previous year, extremely popular with the profession. That wouldn't make it into the reconciliation, but it's bipartisan. So there's also some tax preparer language in there and some disaster relief. We see that actually potentially moving as a standalone because of the consensus around it.
That would be really well received if we could get that to move.
Yep, we're working on it.
Yeah. And also, Mark, part of the reason why, we were so kind of, happy to see this bill pass and behind us, because there are other pieces of legislation like the extension bill that you have in there that we'd really like to get focused on, but we couldn't have any of those conversations until this was done.
Absolutely.
So here, the other question was, what time is the town hall Monday? The live edition is on the special one related to the tax law will be July 14th at 2 p.m. And we're still going to have our normally the archive version of this town hall at 1 p.m. on Monday.
Lots of opportunities to see our smiling faces.
Yes.
But on this town hall, we will be going through many more of the provisions.
That's right.
We'll give you the pre and the post. We'll give you some conversations with Jan Lewis, who is our AICPA vice chair and a tax practitioner as well. She's just an amazing resource for me to understand what's on the mind of practitioners. So I'm glad that she's going to be joining us as well, along with Melanie Lauritsen, who's been doing so much of the heavy lifting on the advocacy side. Really quickly, let's run through a round robin of things that we want to just make sure are on your radar. I'm already seeing some buzz in like my North Carolina Society newsletter about folks who were kind of caught off guard about the new ID.me sign-in process that's effective July 7th. And there are instructions on it. The feedback I've gotten is that for some people, it's easy. For some people, it's a little more than they were hoping for. But again, just wanted to make sure that you've got that on your radar and that you're taking care of it. We are also aware of some IRS systemic issues where they're sending out incorrect notices, as an example. So we've given you a quick update on our AICPA tax news page. Unfortunately, we have to talk about disaster tax relief. This time it's Mississippi and Missouri. I know that we're expecting to see something on taxes very soon. We've also had flooding in North Carolina over the last week, so we might see something there, not quite sure. And then just some other things that we wanted to make sure were on your radar. So I think that's a good chunk of the technical for this session. And I think Mark's going to talk about tariffs really quickly.
Yeah.
And we'll move in.
Yeah, no, just to kind of wrap up, this whole tariff discussion is still ongoing. letters went out to 14 countries from the White House, basically telling them, that they had to start to move along deals, including Japan and Korea, which are huge trading partners, before an August 1st deadline. Basically somewhere between 25 and 40% suggested increases unless a deal is cut by August 1. And so, again, this is kind of an extension of those conversations. Deals, we are hearing that deals may come in with Cambodia and India and possibly the EU. And so, there may be announcements there. I will say, the escalation, I think, is in order to kind of push these to conclusion. Our hope is that we get to a day or two where they make a bunch of announcements that these deals are cut, and we could kind of move past some of the uncertainty.
Well, thanks, Mark. Quite an update there. One thing that just I'm seeing from there's a minor issue out there that the attendance check polls, you're not getting the ding today for some reason. So it's silent. Just check, so you have to look for it on your screen, and we'll make sure that everybody gets their credit for CPE today. So now, Mark, we'll have you back during open forum, and Lisa, you'll be joining us back in a minute. But I'd like to bring up Ben Alleri, who is the CEO and co-founder of BlueJay, also a leading tax expert related to, in particular around tax research, a lot of AI background, degrees from University of Toronto and Yale. And I also want to note that BlueJay is a partner that we've identified as we're trying to help firms transform their tax practice. That's what we do here at CPA.com, is help firms utilize these technologies. And we've been in partnership with BlueJay for the past 6 months. And Ben's going to share with us a little bit about what he's seeing right now. We've got a very interesting discussion coming up here on how the paradigm is shifting with these new tools related to tax research. So welcome, Ben.
Thanks, Eric. It's a pleasure to be here.
So, just looking, and I actually, as we were kicking off today's town hall, I was thinking about this Tax Act, which is about 900 pages. And the CARES Act was roughly the same size. And I remember that. And Mark, you and I back in March of 2020, and we're there reading it, and we got all other people reading it. And things would have been different. And then, Ben, you and I were talking this morning, or not this morning, yesterday, about how firms approached the 2017 Tax Act. So we said, let's just look at this. Let's just look at how the Tax Act of 2017 was approached, even how the CARES Act was approached. And on this chart here, we've outlined in some ways how mid-sized to large firms functioned and smaller firms function. So Ben, I know you've been doing this for a decade plus, so you were familiar with what happened in 17. So I'll let you just kind of comment on some of the points highlighted in this slide, and also provide more color. Then we'll have Mark Koziel add some reflections.
Yeah, look, Eric, I remember feeling so frustrated in 2017. The Tax Cuts and Jobs Act gets passed, and everybody's craving clarity about what does this mean for my clients? I need more details. How's this actually going to function? And all the firms, mid-sized, large firms, small firms, were scrambling to try to make sense out of what this means. We saw with a lot of the larger firms scrambling, the experts to focus on the dimensions of the TCJA that they were expert in, writing up kind of guidance and putting together ultimately decks at a lot of firms that would get circulated by email to all the tax professionals at those large firms. Often, like on a weekly basis, you could expect in your inbox a 60 or 70 or 80 or longer slide deck outlining the latest and greatest position on various dimensions of that bill. And it led to a lot of unread slide decks surrounding all of the stuff. It was just too much for everybody to keep up with. You don't have time in your week to read all of the stuff. And smaller firms just didn't have those same resources, so they weren't sending around all this guidance on what's changing and how to cope with it. Instead, they were looking to experts to guide them. And we've got a bullet here about third-party online in-person training. AICPA played a big role, of course, in that in that process. What everybody had in common was really experiencing the pain of coming up to speed on what all of this means. And this is in so many ways very similar to, I think, what we're seeing this time around, except there's something very different this time, which is we have new tools, new tax research tools that are going to be allowing folks to get up to speed much more quickly on the latest and greatest with respect to whatever dimensions of curiosity they have with respect to the changed law. And a nice example is, thinking about client outreach. So everybody has clients who are considering, well, what does this mean for me? Now you can leverage this new tax research technology to very quickly get a very reduced kind of synopsis of what it means for particular clients, and you can get that out to them right away, show that you have their back, you're thinking about them, you have them in mind, and engage with them, and provide them with the information as you get it, to reassure them. So it's very exciting, but I don't know, people have short memories sometimes for the pain associated with this stuff. I just want to reopen these wounds for everybody from 2017 and remind everybody just how painful it was to go through that process of figuring out what all this means.
Well, Ben, I mean, I can look at it in some ways also as a positive. Right now, we've had 600 questions come in. So many specific questions. I almost wish, in some ways, right now with a lot of these questions, we would just have it, because some of them are very specific. They're very client focused, and we actually could answer them real time with one of these modern AI, Gen AI tools that have already uploaded the entire bill, already have the extensive research, the IRS tax code in there. It's game changing, and I think this is the modern way to digest this information. It's just a better way. I mean, and if you look at just the evolution of tax over the past 40 years, it's just gotten better and better. So this is the next, the firms need to know the high level information. They need to help guide and put the right attributes of questions in, like they're doing today, like they're doing right now in this town hall, Mark Koziel. So I think this is you can think about the pain of the past, but this is actually an opportunity to be proactive, to be a trusted advisor, and to get ahead of things, Mark.
Absolutely. I think it is the game changer. And Ben, I know you have mentioned, just the uptick that you've seen in the number of inquiries just over the last couple of days of what's happening. And that's going to continue on. To have real-time, hands-on information, I think, is going to be a little more comforting for our members to be able to do that on a regular basis, and to be able to very specifically say, I have this client in this situation, and be able to get answers around that. And it is now truly, we've talked about becoming that trusted advisor. You are now that trusted advisor. It is here. You have the ability and the tools to do it. Now is the time to proactively take it with your client.
Right. So, and Ben, we got some, clients, there's some questions coming in. Hey, clients can use some of these AI tools. Yes, they can, but there's professional, tax focused research tools. And what you're going to be doing with your clients, and I do think it's changing. I mean, it's not necessary for maybe the small firms to go to 2 8-hour courses per se, versus leveraging a tool and then looking at how they augment and leverage that tool to do these client memos, to have these initial discussions in the top 5 maybe impacts for their client, and then have further advisory discussions with them. And this is,
Eric,
go ahead, Mark.
Yeah, full well. I mean, you say that the client can use the same tool. Yeah, great. Client can also do their own tax return in TurboTax. And many of our members have come to benefit and realize that once the client starts to go down that path of really not having that technical professional background, got them into bigger trouble than it did actually solving the problem. And so the idea of the trusted advisor still will not go away, even if these tools are accessible. There's still that analysis and that understanding that is absolutely necessary. It's not about the tool, it's about the knowledge.
Mark, 100% agree. It's like, there was Google before. This is just, but this now is at a form where and we're hearing this, and Ben, so just, and the reason why it is about capabilities, and it is about understanding the bits and bytes of the tax bill, but it's a combination of the two. So Ben, yesterday I know was the highest, search a day that you've experienced. So it is happening. I mean, this movement's happening. I think probably 10% of the firms right now are leveraging tools like this. So it's still just the early adopters.
Yeah, and what's really interesting, I mean, building on what you've each said, increasingly what we're seeing is folks have a screen open and they're using these kinds of tools while they're on the phone with a client. A client calls up with a question about what's in the new tax act, and they're leveraging these tools in real time. Instead of saying, hey, let me look into that, I'll get back to you next week or whenever they're able to, they will do the research in real time, generate an answer, quickly skim it, verify that it's accurate, and they're able to deliver incredible answers in real time to the clients. And so, Mark, this is building on the dimension of what you were saying, which is you need to have that expert kind of be that middle layer to interpret the results coming out of these kinds of tools to provide to the client. And the client can log into ChatGPT, but it doesn't have like all of the bill, and it's not been properly curated and formatted. And so the specialized tools are going to really thrive in this environment.
To that point, Ben, I mean, so the client calls up and says, hey, am I eligible for this Section 174 deduction? And then all of a sudden, should I retro that, or should I just go forward with it? Those are all the pieces that we're going to come into play on this, and that's the value add again.
100%.
So more to come on this. And the AICPA and CPA.com. So what are we doing? We want to put together training that helps you leverage these tools more effectively. There are, and we just spoke agnostically about this, there are other tax research tools out there. We're on the field here. We want to learn about these tools. We've got a special discount program, a special pricing for AICPA members here that you can have access to. This is the great equalizer for firms of all sizes. The small firm can utilize this service just like a top 20 firm can. So that's the exciting thing in the onboarding of these services, of these tax research tools, is very straightforward and very easy. I mean, Ben, you can be up and running in 24 hours, or you can be up and running in 2 hours.
Yeah, totally. And the time to value is instant. If you know how to formulate your tax research question, you can get value out of these tools immediately.
So we've got an 8-page, research best practice paper here, which is agnostic, but we did it with Blue Jay, and then if you can access their program, and there are other solution programs out there as well. So Ben, it was great having you with us today. As I said, we've got hundreds of questions coming in, some good questions here related to this service, and we'll be following up with you and your team on this. But thanks for your partnership and helping. I mean, maybe a final comment. I know the profession is very important to you. Just maybe a little bit about your career and what you've done, kind of helping practitioners.
Yeah, thanks very much for having me, Eric and Mark. It's been a pleasure.
Thanks, Ben.
Thank you. Okay, Lisa.
Thank you. All right. As I mentioned, I'm excited about this next segment because I get to talk to Mark Gallegos and Bob Keebler. You'll see their impressive bios there on your slide. And as they join us, I just want to thank them for being what I call serial volunteers. They are so incredibly active on our committees. They're active in speaking. They're active in planning. And I actually came across Mark's session at Engage that he did and was just really impressed. And luckily, I've known Bob for quite some time and have always known him to be just so supportive and engaged and up on what's happening. So with that, let's get into the conversations about what should CPAs be thinking right now and what should they be working with their clients on to really deliver that value that we've been talking about in the beginning and then again in that tax research segment. Before we get started, really quickly, Mark, tell me a little bit about your firm. How big are you, and how many offices?
We're 4 offices in the Chicagoland area, 160 employees, 50 million revenue.
Awesome. And how about you, Bob?
We're a boutique, just estate and trust firm. We're in Green Bay. There's about 15 of us.
So got a small firm and a big firm to help us guide this conversation today. And I'm going to start with you, Mark. There were so many changes in this legislation. You've got individual provisions, you've got business provisions. How are you looking at the ones that will have the most impact on your client base?
Yeah, great question. I mean, right out of the gate, the research and experimentation, the 174 costs, the fact that we get to expense them again is a huge win. I know back in 22, this was heartburn from my clients, and they really felt it all over the country. And so to be able to not only expense it, but now with small business, be able to retroactively go back and amend and fix that, or fix it in 25 going forward. These are great opportunities for our clients.
Yeah.
Depreciation. When you're looking at bonus depreciation going back to 100%, what a great way. And also 179, increasing that up again. Businesses can front load deductions, freeing up capital for investment. This is a huge win. And then also, obviously, the SALT cap at the individual level, raising that to 40,000, indexed through 2029. You're looking at more people potentially being able to itemize, utilize more of their SALT, but also PTET, finding ways to continue that avenue for flow through entities and workarounds on the state tax deduction. Great opportunities there.
That's awesome. Bob, what about you? What do you think is going to have the most impact on your clients?
Three things, Lisa. First of all, rates will stay the same. So for 3 or 4 years, we'll have a very vibrant environment with Roth conversions. We're going to see SALT, which Mark just spoke about, is going to be a very big thing. How to manage that phase out, because that phase out can create a 45.5% incremental tax rate as you go from 500 to 600,000. So everybody will have to do the math on that to prove it to yourself, but we've looked at that. So Roth conversions, watch these SALT phase outs, watch the SSTB phase out. It's been made easier, but it's still a very difficult phase out. And then on the estate planning side, $15 million exemption per person, $30 million for a married couple, but continue to watch that people are filing portability returns. If husband dies and there's ever a chance his wife could have a estate tax, even under a future administration, then you want to file for portability today. So don't lose track of that.
And so those are some of the big provisions, but then how do you approach this within your firms? How are you getting the firm ready to roll this out to your clients? Mark, how about you?
Yeah, I mean, I think number one, identify internal champions, find out people that could take over and lead practice groups within this bill. I mean, you got individual provisions, business provisions, estate and gift, all these areas that you need to have. Not everyone just kind of like focused on one area, but split it up, make sure we're doing that. And again, at the end of the day, clarify those roles in the workflow, because having good process and procedure is key to this, handling the outreach to the clients, putting on webinars, getting articles out, but also handling the clients and making sure they're up to speed on all this information. So relevant to what we're doing today.
And Bob, in your smaller firm, how do you approach this?
Lots of training, AICPA training certainly will be there on Monday, Lisa. And then we also want to focus on all the AICPA resources on both the tax side and PFP. So there's a lot. Carrie Sennett and I did. Mark was on that actually too. The three of us did a nice tape for PFP. But the real thing that I want to say and emphasize is you need to be disciplined and focused on using software when it's updated to catch all these phase outs, because there are 7 new phase outs that I caught so far. Probably more like 10 or 12. But the SALT phase out, the SSTB phase out for the senior deduction, these things are not going to be intuitive. Even to someone at Mark's level, he's not going to know intuitively to look for that at this particular corner. So we have to be disciplined with using software.
And as we were talking before the call, we said that this may be time to give up our precious spreadsheets and really rely on something that's more technically advanced, like your software and the tax research tools that like BlueJay and others. So, Bob, you have a fairly niched client base, and so how are you going to figure out which clients are going to be most impacted? How are you going to identify who you're going to reach out to first?
I know my clients fairly well. But I think if you had to look at it, we are certainly going to look at SALT on both these individual returns and on trust returns. SALT will be $40,000 on a trust return unless you go over that $500,000 threshold. So I think there'll be a lot of planning around that. Now that's somewhat small planning. The other thing we have to watch, so all this itemized deduction planning will have to be evaluated. And I'm putting together my thoughts for the PFP group on itemized deductions after this bill, because the charitable, maybe we can get Mark to talk about this a little bit, but the charitable deductions has now a 0.5% floor. You have your SALT. Mortgage interest is, of course, capped. People will itemize every several years. Do you use QCDs or do you gift appreciated securities, and how does all that play in? So that's kind of where we're going to start. Now, from an estate planning perspective, anyone over $25 million, nothing changes. We still have to do the same disciplined inter vivos planning. But for people in that $10 to $15 million range, they may be able to take a deep breath and regroup a little bit. And they may not have to be funding those slats and other trusts we've been talking about.
That's great. And so, Mark, you've got a much larger firm. You've got a lot more clients to sift through. How are you going to approach it?
Yeah, I mean, the best way is we're mining our tax software. You know, you can break down who's taken the 174, who's capitalized between 22 and 24. Who are those clients? Identify them. Looking at, you know, for bonus depreciation, who's typically had a lot of high CapEx. Looking at SALT exposure. Finding ways to really figure out who we need to identify right now, get in touch with them, and come up with a plan for planning. Because if you wait too long, it's going to be too late. And as Bob alluded to, there's so many different things in the code that in this bill that can literally have some impact. So, and I know Mark talked about it earlier, like you kind of got to start digging into it and working through it. And you know what? We're not going to all understand it right out of the gates, but the more we talk about it as a community, the better off we'll be in the long run.
That's great. And I think that's a great lead into the next conversation point, which is how can we be providing actionable insights and when should we start? There's the softball, Mark.
Yeah, I mean, don't wait until October 15th. I mean, and I know everyone knows this, but it's so easy. You know, we're still got extensions for September 15th and October 15th. And before you know it, October 15th comes and you kind of have this 30-day of just nobody wants to do anything. And then you're at the end of the year and there's holiday parties. And before you know it, you're in the tax season. So start now, identify those clients, identify who you need to talk to, get the word out, and really start that planning. Get 24 done as fast as you can, if can be, so that we can move on to planning and really set our clients up for what this bill is going to do for them.
Yeah, and we talked about getting those tax projections updated and you know, really having deeper conversations since so much is going to change. Bob, when we were chatting earlier, you mentioned that there's an opportunity to shift from estate tax planning to income tax planning. So in 1 minute, can you summarize that for me? And then we'll obviously have to talk more about all of these things as we get more time.
Absolutely. I've already done some classes for our trust and estate lawyer friends, and basically they realize the good work they've been doing on the estate tax side is going to drop tremendously. So the shift, Lisa, will be to using non-grantor trusts for income tax planning. And there's 7 or 8 things that we can write down, just a quick list. We'll use non-grantor trusts to expand SALT. We can use non-grantor trusts for 199 Cap A, shifting income, more QSBS exemptions, using out-of-state trusts to save state income tax. The charitable distribution from a trust is different. You can, if a trust earns $500,000 of income, it can actually give away $500,000 of that income in under 642C and get a complete deduction. And then, of course, we'll be working with our lawyer friends to put together asset protection trusts for people. So this is a real renaissance. And I just think that firms like Mark's just need to find a champion who's going to understand how exactly to use these trusts and can coordinate with legal counsel the things that need to be done.
So if you can tell, this is why I rely on Bob for all of our state and PFP questions, because he is just an amazing resource, and you both are. So I appreciate that. We mentioned a podcast that Mark and Bob did, and we've got that link for you on the next slide. So some podcasts that you can listen to, and upcoming our Summer Tax Rewind. Mark's going to be a guest on that. And then I also just want to very quickly point out all of the resources that we have available to you. We've got an entire resource page on planning after these tax changes. And I want to call out very specifically on the next slide charts that we've been putting together that are up to date, hot off the presses, that will show you the reconciliation of prior provisions to current provisions. One is on a personal financial planning basis, and one is more of the overall income tax considerations. So these are amazing resources. For a limited time, they are open to anyone. So I encourage you to go ahead and take advantage of those. Use that BlueJay Tax Research or other tax research technology tools, and start making those tax projections. With that, I'll take us over into open forum.
And
Thanks, Lisa.
Lisa, to clarify, you said for a period of time we're going to have them open. That's because they are typically section member benefit.
That's correct.
Inside
Thank
of
Yep.
sections that they belong to. So
Yep. Great.
not that we're
Great
taking
call.
them away from them. Correct.
Well, this has been quite a town hall, a lot of information, close to around a new record. We've had over, Mark Kozel, 13,000 members on. A lot of detailed technical questions coming in about the tax bill.
Yeah.
Also, a lot of input related to, concerns about, where things are going with the deficit and concerns with some of the provisions in the bill. So Mark Peterson, Mark Kozel, these are things that I know you're talking to firms, and not just the firms, but members in business and industry too, all the time. So maybe just a couple of broad comments here as we wrap up today's show.
Yeah, I think that overall, are we thrilled with the deficit or increasing the deficit? Absolutely not. I think this will be part of the conversation about fiscal responsibility as we go forward. But there was a bill that was going to pass, period. That was on the agenda. The question is, and the pluses and minuses, no bill is perfect. In the pluses and minuses, how did we fare as a profession? We did okay. Now we can get back to work on some of the other areas where we need to help wherever we can.
Absolutely.
Ben, a lot of people appreciate the tool that you've put in place. Just comments on your source data and the other source data of using a ChatGPT type of tool, and what are the differences?
Yeah, I think one of the big differences, Eric, is the amount of effort that goes into curating and making sure that we have the authoritative version of the legislation and all of the supporting documentation ready to go. And also, really importantly, curating out stuff that has been superseded. So as the House passed their version of the bill and the Senate passed their version of the bill, and we got the final version of the bill, we at BlueJay have been making sure that that information is in the product and ready to go to field all of the activity on the platform. As mentioned earlier, this week has been the highest week of activity ever on our platform. I suspect it's the same on other tax research platforms, as everybody's trying to make sense of what this means for them and their clients. But there's a huge amount of effort that goes into actually parsing the bill and making sure that everything, all the content is actually really accurate. And it's very different from those other tools, the generic tools, because they don't have the same intense activity behind the scenes with tax experts making sure that the content is current.
Thanks, Ben. Lisa, you've been looking at a lot of questions. Anything you want to raise here before you and I go into the final close?
PPP level of questions coming in. So I'm not even gonna look at those. I'm just going to maybe remind all of our practitioners, and if you're a business and industry and you're trying to wrap your head around all of the changes, just think about working smarter, not harder. Think about how you can implement processes, create champions, and really leverage the tools that are available to you through your research, through your software, through AICPA charts and podcasts and webcasts, because this is a great opportunity for us to show our true value.
Thanks, Lisa. And with that, I'll thank all of the attendees, Mark Koziol, Mark Peterson, Bob Keebler, Mark Galagos, and Ben Allery. So thank you very much. Lisa, let you and I close out the resources.
My one last plug for the PCPS benchmarking survey. It's the largest one in the profession. Your data really helps. So take an hour or two. I know it sounds like a lot, but you're going to get so much value back out of this if you input your data.
And we'll be talking about a lot of data at Digital CPA in 2025, the end of this year, growth by design, talking about, we have a tax track, we've got an audit track, we've got client accounting services track. So early bird discount you can still take advantage of. We've got the quality management standard coming up, deadline December 15th. Lisa, you and I and many others talked to a lot of the engaged attendees about this. This was a top topic. Again, it's about resources and understanding the standard. So here's some tools and information for you to related to the QM standard. About the town hall, we will have this archive version Monday, July 4th at 1 p.m. And then you're going to have the special edition, live edition, Monday, July 14th at 2 p.m. And yes, we will have an archive and we will have this recorded. So if you cannot attend this, you can watch it on YouTube podcast, and we can also make this available, CP eligible, available in a archive fashion. So here's what we have coming up for the remainder of the year, the remainder of this summer. Great being with all of you today. Lisa, great being with you. And you'll be back with the community on Monday.
Thanks, everyone.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.